There's going to be a huge power demand issue over the course of the next few years because of AI and data center generation, particularly in the power provisions areas of that. So think about natural gas turbines, those type of things. It takes 2 to 3 years to build out a natural gas turbine. For an AI data center, it's 10 years for a nuclear power plant. So again, we're probably going to see some near-term demand for natural gas generation, power generation near term. So there's going to be some opportunities in that sector. But here's what you need to know before the bell this morning. We came right off that 50-day moving average. The buy the dipper stepped in. Yesterday, the markets opened up a little bit weak, came in, bought the market all afternoon, finished up kind of moving higher yesterday afternoon. So again, we're coming right off that buy the dip. We're about to trigger a MACD momentum buy signal. Relative strength is not overbought yet, but is starting to recover. So that's all very bullish for the markets here near term. But again, this is the market cap weighted index. And as we talked a little bit about yesterday, the equal weighted index is looking, kind of very much similar, but seeing that same type of action. Again, we're starting to see that rotation into other areas of the market. That's why the relative strength, the equal weighted index has now broken back above the 50 and the 20-day moving average and is set to try to start pushing up towards recent highs. Again, triggering a buy signal there, relative strength improving. The point is, again, just maintain some diversification within your overall portfolio because that's going to help shelter you when we get into these areas where all of a sudden, the big mega cap stocks, they're not working as well. Other areas of the market is. So, if you're highly concentrated into very specific stocks, you're going to have a lot more volatility in your portfolio. If you can diversify out a bit, you'll perform a bit better. But continue to watch this because, again, we've been talking about this potential rotation within the overall markets. And, one area in particular that, we're paying attention to has been energy as of late. Starting to see a bit of a pickup here in the energy sector, even though oil prices haven't done a whole lot here. Again, there's going to be a huge power demand issue over the course of the next few years because of AI and data center generation, particularly in the power provisions areas of that. So think about natural gas turbines, those type of things. It takes 2 to 3 years to build out a natural gas turbine. For an AI data center, it's 10 years for a nuclear power plant. So again, we're probably going to see some near-term demand for natural gas generation, power generation near term. So there's going to be some opportunities in that sector. But we're starting to see a bit of opportunity in the XLE. So again, just XLE, which owns oil and natural gas refiners. We're starting to see some movement there over the last few days. Also, too, just, staples is one of those areas that has been under just an immense amount of pressure. And this is really, kind of very tied to what's going on with the consumer. The consumer is weak. But we're starting to see a little bit of a pickup here in the staples. So we're starting to see a little bit of this rotation into some of these more defensive areas. Again, this is very early, about to trigger a buy signal from a very, very oversold level. There's some potential here for a decent run in staples. So just something to maybe kind of think about in your portfolio as well. So anyway, there's what you need to know before the bell this morning.